G'day traders, 1 minute mindset reset. Just finishing up with a workout. Today we're talking about there are no certainties in the market, only possibilities. One of my mentors, Bill McLaren, 40-year Wall Street veteran, used to repeat that phrase over and over. When I was learning from him, he would say, there are no probabilities, there are only possibilities. And so when we come to the market each day, we have markets that we can track and maybe narrow down to 2 or 3 instruments that look like well-engineered charts, depending on the day of the week, the template, a possible opportunity that they may offer. And then certainly there are other traders trading maybe holding positions, maybe looking whether to lock in profits or hold on and stay in for measured moves if they're in longer time frames. So today we had Friday prelim GDP, and I can't remember what the other one was at 8:30 New York time. And again, looking at gold, we're down low. It's Friday. Remember when parabolic free cash Fridays, we're looking for an opportunity, and sometimes, there are opportunities in the London session on different instruments. We're up high, but they still gave 25 pip reversals inside, up high, even though the underlying bias is still directionally long. And so we get to the US session, most of the currencies had sort of pulled back a little bit, but we're still no break in structure. No first red day, nothing like that, and we're up high. So low-hanging fruit is a low probability. We have markets that have triggered the previous day's high and then traded down inside. So you could be trading up into a high. Pound yen, a longer time frame, we have the potential for a larger measured move, which again, we have US holiday on Monday. Go back, there's a great video on understanding 3-day weekends in the US, how they can set up heading into the new week, because the Asian and London markets are open. US session closed, it can stay as a narrow range day, which typically can start off a new week, giving us a three-day setup, maybe Tuesday or Wednesday. So understanding today, we had gold, and I narrowed it down to gold and DJ30. Again, my preference with DJ30 is DJ30 first, NASDAQ, and then S&P. I find that S&P, sometimes I get gaps, large movement, and the spreads can fluctuate a bit. I find the DJ30 tends to be a bit more, a bit better, well-engineered chart and consistent. In terms of similar to gold, I find that it seems to be very well structured and timed. So, looking at gold, we had a peak formation reversal in Asia at the low of the week, which peak formation high in the lower third of the US session. Peak formation low of the week failed breakout in Asia, trapping shorts into the London window. So we had a whole move above that rectangle, 100 pip box. Peak formation low in London, a higher peak formation low in Asia, peak formation low in London at double zeros, and a peak formation high. And then a market at consolidation at 50% heading into major red news. Now we had breakout traders from Wednesday's low of day in the market on Thursday, and that was a potential target if we indeed got a breakout vertically on the news for a first bounce trade that could have went to fill in that gap. Friday we can get a parabolic reversal, we can get a parabolic continuation, but the DJ30, we had gone vertical at the end of the London session, 100 pips. Which to me was a low-hanging fruit opportunity on the news if it eventuated. Consolidation, engulfment, first minute of the news, sideways for 3 minutes. Again, I talk about counting 1, 2, 3 for the continuation down into longs off to the gap time. So, great question from a trader. You're in the news, it drops down 25. The next candle goes vertically through that quarter level, and it should blow off to get traders who are long in the London session. Immediately on a trade like that, trading into a peak formation low, it's either going to blow through or it's going to reverse. And as I talk about that, when it trades down like that and breaks down through a quarter level, I'll immediately adjust my stops to that quarter level to make sure that if it reverses fast, that I lock something in, because again, we're on Friday, we're inside. The market had set a bullish flag up at the high before dropping down, and we're inside of a consolidation from US, Asia, London, heading into the New York Open. So that trade failed. Took me out with 25 pips. That's a first signal to now be cluing into the New York Open. When I say it failed, it didn't follow through and take out the low of the day. What that means now is that shorts are trapped. Shorts are trapped. We have a high of the day opportunity if it sets up, which it did. It set up as an ascending triangle over the next 60 minutes. Now, there's only possibilities, no certainties. On the news, 1 minute chart went straight down to the low of the London session and went sideways in consolidation. We're down low trading into the low of the session. Was not looking for a first bounce or anything on gold. It's day 3 and we're trading into a reverse peak formation from the Asian session. Again, I'm thinking shorts are getting trapped down low, 3 days down. And I keep repeating this. I'm not trying to trade a market. I'm looking for the best trade setups. So again, a comment from a trader is, and I mentioned this yesterday, if you're not consistent on gold, don't trade it because it will burn you. You play with fire, you're going to get burned. Don't trade, study gold. Because in another trader niche, Jacker said, if you can trade gold, you can trade anything. And that's it, exactly. But if you trade gold, it's your decision. Be prepared to be confounded, get your ass kicked repeatedly if you engage in impulsive, irrational decision making. Everything's timed and measured. That market is, certain days are going to be gifts. It'll blow off. Day 1, day 2, day 3. You might get a day 2 trend trade like yesterday. All in session. Why? Because it's Thursday. And maybe they're going to take traders down low and trap them in on Friday. No idea. But I did not want to short that. It went sideways into consolidation. That is not a first bounce trade opportunity on a Friday into the low of the week reversal. So as we set up into the New York Open, okay, ascending triangle, breakout. It broke out on the 5-minute chart. Well, I can't. So another great question was how did you get in? I treat that like a first bounce opportunity. That's all that is. An explosive breakout in a consolidated market sideways. Yesterday was not a first green day, but it had the same characteristics as a first green day. Trap volume below the low of Wednesday. Peak formation, reversal, and consolidation. It closed below the open, but it has the same characteristics as a first green day and a consolidation sideways. I did not want to post first green day because I'll get 1,000 questions about, but I thought a first green day had to close above the open and all those sorts of things. Sometimes markets will do things that they don't just lay it out on the dessert table for you to go and have and pick your sweets. You got to be very selective, but you got to observe how price behaves. I said after the news, next most important time could be a 2nd hour trade, New York Open, or a 3rd hour opportunity. First bounce, and then a measured rectangular range expansion. Several traders hit that trade, but the most important thing I want to emphasize, there are no certainties, only possibilities. So your job as a trader is to hunt out the best setups. I'll repeat this, I want you to hear this. It's not to try and trade the movement in a market, it's to identify the highest probability opportunity. So some traders, if you're going to keep focusing on gold, there's going to be days where you shouldn't trade it, or maybe you can't read that. Maybe your expertise isn't there, and maybe it's not the best market to be trading. Because maybe it's going to trap people, it's going to move around, it's going to do things that are going to bang you up, eat away at your account, and damage your psychological capital. So I repeat, if you want to trade gold, okay, if you play with fire, you can get burnt. Become very, very selective. Master the process, master yourself, and master the setups. Because they're going to be here next week. Like, one guy said this is all horseshit. Well, the horseshit will be there next week too. Rinse and repeat. And so will the free money, free cash Wednesdays, and free cash Fridays. If you do other things outside of that, look yourself in the mirror and shake your head. Because there's other traders who nailed it today. And they're going to nail it next week because they're getting better at mastering their own behavior. A couple traders gave money back yesterday after making some fantastic trades. They gave some back, and a couple traders lost some after being in profit. That's stuff that's all, behavior related. And if you rinse and repeat that, the same shit will happen with that too. So how did I learn this? How do you think I learned it? Because I made a lot of stupid mistakes repeatedly. So how do I know? How did I become such a genius at avoiding losing trades? Because I took a lot of them. I took a lot of them over and over again. So when a frustrated trader says that, I laugh because you have no idea the stupidity that I engaged in. And until you change that yourself, you'll blame everybody else. You'll blame the markets, you'll blame somebody, you'll say it can't be done, but you have no discipline, you have no process, you have no edge in the market, which means you shouldn't be trading. There are no certainties, there are only possibilities. And so you need to identify the highest possible opportunities and then master the lifetime execution of those. And nobody else can do that. You can't watch that. You can't watch the process. Nobody ever asked to come to the gym with me and watch me work out. Funny thing, nobody ever asked me that, but I never miss a day. So watching doesn't do a thing for you. You want to watch me work out? Will that make you fitter? Okay, it's really simple. There's a high and a low. There's a consolidation. There's either an opportunity, and if there's major red news, we wait for the news. If there's an explosive move that offers a larger time frame opportunity for first bounce, then yes, there's an opportunity there. But if there's a low probability move, or if it takes out a level inside of peak formations, you need to understand what that means. They're trapping traders. They're jamming them in. And what did we see? A third-hour explosion down through the higher level longs into the Asian longs from the Asian session, and then a pullback. I have no idea what's going to do now. But I'm not interested in trading that. I'm not trying to trade the moves. I'm trying to identify the highest possibility opportunity on the day in the session that I'm trading, and then watching how price behaves, watching the clock. If I'm going to take a position, I'm going to scale into that. If it's behaving as it should and it's got the opportunity for an explosive move, I will scale in terms of before it takes off without me. And then if it comes back, or if it blows through a level and I can lock in some profits, fantastic. If it doesn't behave as it should, I will cut that trade. I'll either try to get out with a small profit, okay, a small loss, or break even. But I'm not going to sit there and hold on and go, it didn't work, it didn't, this is horseshit. Who knows what the markets are going to do? Okay, identify the highest possibility edge that you see on the day that you're trading, in the session that you're trading, and then master the execution of that in live time as flawlessly as possible. Manage your risk, lock in the profits, walk away. Don't give it back. Don't sit there trying to trade movements in markets. That's horseshit to me. So hopefully you got value from today's video, traders. Congratulations, a lot of fantastic opportunities this week. Some traders really did well. Some other traders obviously engaged in frustrating and challenging situations, and only you can change that. Only you can change that. So keep it simple. Step away from the screen. Focus on stress-free opportunities, not trying to trade movement in markets, and you'll see a drastic difference in your results, in your mental headspace, and in your overall performance as a trader. Keep it simple, 1% better every single day, and may the markets go with you.